Welcome to another episode of Limitless Trading. We wanted to show you all the levels that we saw and how to prepare you. So the question, I'm getting asked is, how do you beat this market? How do you beat, the Trump tariffs? And what we say to everybody is you do it level by level. Don't overtrade. Don't assume. Don't follow for the noise. But most of the time when your levels hit, it'll tell you what's going on. We had said that once this trend line broke, it was waterfalls. 53.16 was going to be first, probably get some margin cost at 52.12. 50.35 was a little bit of a support from January 2024. We also said that we had some support down here from back in actually 2023. So between October, November, and December, there was a cluster here that we could actually revisit, maybe even tap under and start defending. And in fact, that's what the market did today. We also let you know that the VIX was going higher, and that was going to cause downward pressure on the equities and probably some margin calls. And in fact, we went right under 58.09, went into the low was about 58.36, recovered, and then closed above 50.35 as of this recording. Now, the question is, do we crawl all the way back and back test the trend line? Because the market loves to back test liquidity, which be about 55.31, which was a level that we had looked at before. Well, the way you beat the market is, again, we use our tools. We use AI, we use Elliott waves, and we have some dark pools that tell us when and where the market's going to go. So if we defend this 50.35 on the daily and recover 52.12 on whatever news, whether it's a negotiation, retaliation, or some of the pivots, we have a pivot on Tuesday and another pivot on Friday, but CPI is Thursday. If the market moves on and likes any of the data, we're going to recover 52.12 back up to 53.16, and the market's going to probably backtest this trend line, which is a little bit above 53.30. Now, can it backtest and reject? Absolutely. All of this is bearish. We're on a bear downtrend, and it doesn't at least reverse until we hold and sustain a level. Now, trend is your friend. Trend is down, but again, we're very oversold. The volume was insane. We saw hundreds of millions of dollars traded, which means market makers are short covering. They want to see, do we move on? Maybe some of these earnings report will show that, these tariffs might take some time to take effect. They might get pulled off, so on and so forth. It's all noise. Level breaks down, we short. Level recovers, we hold. In this case, we're looking for a recovery or at least a retest of 52.12, 53.16, possibly right here at 54.16, because that was a little bit of a bounce that we took that might turn into just another resistance level. But I suspect we're going to back test this trend line, possibly come back here, because if you notice right here, these three green candles that were the trend that we had said from the 31st into the second, where the market thought it was bluffing these three players that Trump was bluffing. They're going to want to get out. So I suspect that these guys are going to come out, rescue them at least at 56.84 to get all three of them out, possibly back to 57.75 or another test of the 5800 to get all of these guys out. And then these guys in the nosebleed need to get to at least 5900 to possibly get out. 59.85 actually will get everybody here out, all of them. We'll get all the bulls that got trapped, from the election run. But again, one level at a time. Let 52.12 recover. If you took on the recovery of 50.35, you're already on stop losses already. If you said, hey, Limitless said that there was a support back from 2023, 2024, that's good. You took the long, but you want to either play futures, which are not subject to the price expansion of VIX, or you took shares. If you took options and VIX goes down and collapses, which it looks like it's probably going to head back to 20 before OPEX, which is going to give us a little bull run after tax day, then your option goes down in value because your premiums are juiced. So you want to either take shares or look at futures. Now, on the smaller time frame, as we said, if one of those support hold, which it did, 58.30, which is a previous support, then you walk it up to 59.10, 59.10 held, and we're already up to 51.50 as this recording. The all-time high of the day was 52.90. I suspect that these guys here at around 53.30 to 54.27. And again, it's not that there was going to be a bluff in the market, and it looks like an inverse head and shoulders is forming. They're going to want out. So these guys are going to want out. We filled this gap, and remember, we have gaps way higher. All of these market makers are going to want to get out before we roll over. So the key to this is probably a good bottoming after tax day, then a rollover into May. Probably FOMC will be a short, and then along into the June-July run of seasonality. But level by level, if you want a short, you want to wait to at least 52.90 or around number like 53.29 hits. Let these guys get out, and then you take more puts if you feel like we're going to go. Well, a good probability is that by the 15th, which is tax day, we roll over one more time. But I always say let a back test happen before you start shorting, because again, if you short a breakdown low and the RSI triggers short covering, you're going to get squeezed. So everybody that was shorting the open because it was supposed to bleed back Black Monday, you're stuck. You're here waiting for another drop, which is possible. It'll break down. So for example, if we lose 51.25, we're probably going to, most likely, we're actually going to revisit this 5,700 area, if not by Wednesday or CPI, by tax day. But keep it level by level. Let something backtest like 52.90, 53.29. Let it backtest. Or again, if you went long on the recovery of, let's say, 5,900, you're running on stop losses. Let the market just pay you. And then if you want to flip short, because we are in a bear market now, let one of these levels recover, reject, and take your short. You take your short when the guys in the nosebleeds get out. You don't take shorts, down here in oversold territory, because you're more likely, again, to bounce, which I said to everybody, even if we drop, we're going to bounce. So the levels we're watching for is a rejection of the high of the day, which was about 52.90. But I suspect we're going to get overextended to 53.29, maybe even 54.02, and get all of these guys out before we roll back and touch the 5,700 area. Again, on the daily, wait for at least 52.12 to kiss and reject if you want to retest at 50.35 down back to 5,900, and then the ultimate target, which I believe is going to be 57.86 to the 5,600 by tax week, and then start the June July run to get these trap guys out of here and everybody up here at least as possible before we roll over after August. Like, subscribe, email us with the email that's in the description if you want to join our Discord. We'd love to have you.